Hey everyone, Eric Dutram here with the latest edition of the Dutram Report, the podcast on ETFs and more. This week's episode is taking a closer look at the online retail market and the key trends taking place for this in-focus corner of the consumer world. Now, I know a lot of investors freak out when they hear the word retail these days, but Christian Magoon, CEO at Amplify ETFs, walks us through the promising growth story here and what might set this space apart from the brick-and-mortar side of the retail world. But if you have any questions or comments, make sure to send them in to podcast@zacks.com, and don't forget to find the Dutram Report on iTunes and give us a review there as well. But stay tuned for my chat with Christian right after this. Okay, Christian, thanks for joining us today to talk about trends in the online retail space. Now, I wanted to start off by discussing an interesting stat you have on your site about U.S. retail sales. It says that less than 10% of retail sales in the U.S. in 2016 was from online retail. To me, that seems pretty crazy, shockingly low. Are we basically just in the early stages of the move to online retail?
Yeah, that's right, Eric. Good observation. It's quite amazing that the market share of online retail is still less than 10%. I think according to the latest U.S. Commerce Department statistics, it's only about 8.7% of all U.S. retail sales happening online. So we're really at the early stages. If you think you've seen a lot of Amazon and eBay packages sitting in your building or doorstep, this is only the beginning. There's much more retail sales to be disrupted by online retailers, and they're really using their competitive pricing, their robust selection, and the convenience of delivery options to take away market share from these traditional brick-and-mortar retailers.
So where are we expected to see the next big growth drivers in the online space? I'm guessing, with the whole Amazon purchase of Whole Foods, that groceries is probably going to be a big area, but what do you think?
Yeah, I think that's a great observation that grocery market really hasn't been cracked yet. There's been a variety of firms that have tried to do that, and it's a massive market, larger than apparel. And when you think about the frequency of it, most people are having to go out and do some grocery shopping on a weekly basis. So that frequency is very important, and I think that's one of the reasons Amazon targeted is that they can actually have contact with customers physically every week. That could be a massive opportunity for online retailers. There's certainly some logistic issues that are going to be factored into that. But, you look at a company like Amazon, and they've been very good at logistics, whether that's inventory management or delivery, even having some of their own delivery mechanisms and incorporating artificial intelligence and robots into that. So that's definitely an area we're seeing. Even, a few years ago, it was people calling travel agents to book airfare and hotels. And today we don't think twice about booking all of our travel online. I think there's industries like groceries, potentially even the automobile industry, that are increasingly going to migrate over to online retail. Some of the companies I know that the index provider for our ETF is keeping in mind are companies like an Uber, companies like Pinterest, where whether it's a car service, transportation, or even just content, that these companies are likely to IPO in the future and would be considered online retailers, really deriving the majority of their revenue from selling their goods or services online. So I think there's a lot of potential there. It's certainly an efficient way to deliver goods and services, and more companies are taking advantage of it.
Yeah, and it's funny you mentioned the travel space, because I know, at least personally, I'd struggle to even know where to find a travel agent these days. So that's definitely an area I think is going to be key for this market. But what do you think about some areas that might be laggards in the future in this online space? So maybe, they're having trouble keeping up with the online trend. To me, that might be the area of restaurants, but are there any areas in the retail segment that you think are kind of falling behind the times in the online trend?
Well, certainly department stores are really having an issue here. Their sales now are less as a group than online retailers. Online retailers have vastly surpassed these department store firms. And you think about, why is that? Well, a lot of them, they just don't have the culture and the technical expertise internally to really go out and efficiently market themselves online, create a good experience online. They're just a legacy brick-and-mortar retailer, and they're going to need to change. And That's unfortunately why we've seen about 8,000 stores announced for closure this year in the U.S., physical store locations that will not exist by the end of 2017. And that's only increasing the amount of sales online retailers can do and their market share. Just a quick note on that, going back to 1999, we've seen online retail sales in the U.S. grow by a compounded average growth rate annually of 20% per year. And we think that could actually accelerate with all these store closings. Stores, brick and mortar locations, if they don't have the technology and they're not linked into an online kind of presence, are really an expensive, inefficient asset between real estate costs and maybe lack of productivity from the people that are employed there, because they're not enabled a lot of times with the technology to make them more efficient. So it's a really an interesting time. Retail is being disrupted, like many industries in the past, by technology. And if you don't have a strong online retail presence or the ability to acquire one, as a retailer, your future is not very bright.
Definitely. We've seen that a lot over the last couple of years with some of these department store stocks really falling by the wayside. Now, I did want to ask you about international markets. We've been mostly focused on the U.S., but are we seeing similar trends globally in terms of the shift to online shopping?
We really are. The internet doesn't have any borders, and many countries around the world are actually ahead of the United States in terms of, for example, smartphone device adoption, internet speeds, mobile payment technology. So, an area that actually is quite a bit ahead of the U.S. is Asia. China, for example, is very much more likely to use mobile payment technology as well as to shop online than somebody in the U.S. Market share there is close to 20% of all sales are done online. So much bigger consumer base and a higher adoption rate. And that's why we're seeing companies like Alibaba, JD.com, for example, become not just well-known in China and Asia, but really worldwide. And, that's kind of one of the key things that we wanted to make sure our ETF provided exposure to, not just the online retailers you'd think of here in the U.S., but leaders worldwide that are potentially having success in their local markets and expanding. Amazon, for example, is the number one online retailer, not just in the U.S., but in almost a dozen other countries. And we're starting to see that with Alibaba as well, as they're becoming not only the dominant retailer in China online. I think 80% of all online transactions, retail transactions, go through Alibaba in China currently. But we're seeing Alibaba branch out to other countries and other markets and take their model there and be successful. So this is an area that is not just in the U.S. In fact, we're probably a little bit behind the times. Cutting edge is really happening in Asia, and it's pretty exciting to see as these companies all try to one-up each other and learn from each other, where they may start other ancillary businesses in China, and then you see Amazon do the same here in the U.S. or vice versa. So really kind of a hotbed of innovation, and I think the cool thing at the end of the day is generally the consumers are benefiting from this because they're seeing more competitive pricing and increased selection and oftentimes a lot more convenient options. Now 2-day shipping is a little passé. We're starting to have delivery or pickup within 1 or 2 hours at some of these online retailers. So quite a time to be investing in online retail stocks, but also just watching the industry develop.
Yeah, and so it sounds like that, despite how popular the space seemingly already is, you see this as a big growth story more than anything. Is that fair to say?
It is fair to say, because of specifically in the U.S., but also worldwide, that the majority of sales still come from brick-and-mortar locations. We think there's room for online retail sales to double or triple in terms of market share in the next 5 to 10 years, depending on which market you look at geographically. And that just represents incredible opportunity. To be clear, we don't think that brick-and-mortar locations are going away completely. We think that something called an omni-channel experience is going to happen, where there's going to be online brand that also shows up physically in a brick-and-mortar location, but it's going to be seamless. You can buy online and pick up at the brick-and-mortar location, or potentially you could go to the brick-and-mortar location, buy something, and have it shipped to you via their online service. The winners there, we think, in that new omni-channel retail world are probably going to be the groups that have the better technology, which tends to be online retailers right now, not the brick-and-mortar companies. So we think there'll be survivors from brick-and-mortar brands, and certainly certain stores, large groups, stores like a Walmart, for example, is likely to be a survivor and cobble up maybe some of the weakened brands in the brick-and-mortar space, or potentially partner up with a strong online presence. Walmart did that, for example, in China, where they actually sold their online retail business, instead decided to do a strategic partnership with the second largest online retailer in China, JD.com, and that's how they're executing their business as an omni-channel in China. So we think this landscape's going to change dramatically, and overall, if you have a portfolio that's more exposed to the online retailers, that it could be an incredible growth story of an industry being on the right side of the industry that's disrupting vis-a-vis technology.
Yeah, let's switch gears and talk about a way for investors to play this trend in ETF form, and that is with your Amplify online retail ETF, ticker symbol IBUY, IBUY. Now, this fund holds about 40 stocks in the basket, and I guess my first question is, what do you say to people who might claim, oh, who cares about all these other smaller companies? All you need is Amazon or some of these giant players. Maybe you can expand a little bit more about some of the holdings and the process there.
Yeah, so the common misconception when you start talking about online retail is that only a couple names represent the investment opportunity in that space. So when you talk online retail, a lot of people think of Amazon or eBay, or maybe overseas in China they think of Alibaba. But to think of just those companies really limits your upside. We just did a performance attribution of our online retail ETF portfolio. It holds 44 companies from around the world. And year to date, looking at that performance, Amazon was only the 19th best performing stock of the 44 in the index. There were many other companies that outperformed Amazon. In fact, we had 3 companies that were up over 100% at that time, Alibaba being one of them, Carvana, which is a newly IPO'd online retailer focusing in the automotive industry here in the U.S., Etsy, I believe, was the third company that was included in that kind of 100% or more gain to date. So you really have to take a broad perspective when you look at online retail. Our fund tracks an online retail index, and to be included in that index, you must be a retailer that has 70% or more of your revenue coming from online or virtual sales. And the companies that get included in the ETF really fall into 3 categories of retailers. One would be online marketplace companies. So think of a company like eBay, where they're really providing an online marketplace for people to sell goods and services. The second category is traditional merchants. So these are a company like PetMeds that has 70% or more of their revenue coming from online retail sales of pet medications. And then the third area is online travel. It's the companies that you'd think of initially, probably that you'll make maybe a reservation via Priceline or some of the other Expedia, for example, companies that today it's hard to even think of, as you said, making a reservation in person. Most people make all their travel arrangements online. So those are the 3 type of companies. And when the index provider looks at kind of the eligibility of all companies, retailers worldwide that could be in the online retail index that meet certain liquidity requirements, about 44 companies currently qualify. And then those companies are divided between U.S. and international, depending on where they're headquartered. And 75% of the index is U.S. companies, 25% is international. So it does have a skew towards the U.S. primarily for kind of some of the governance and kind of the focus of our market, which is domestic U.S. investors. But you still get that 25% exposure overseas, and you're investing in companies that are primarily in Asia. There's some South American companies as well that are strong online retailers. So, case in point, this is a broad-based opportunity. It's not just based in the U.S. It's a global consumer trend that we think is also an investment trend investors need to take a look at if they're interested in growth.
Yeah, and you know what? I wanted to jump back real quick and talk a little bit more about the marketplace aspect of this online retail trend. Everyone's familiar with eBay at this point, I think, but what are some other marketplace players in this fund, and why is this going to be a growth area as well? Because obviously we talked about the travel and the traditional, but we've kind of left out the marketplace guys until now.
Yeah, so marketplace is important because oftentimes when you're online, you want to go to a familiar platform that maybe you're familiar with in terms of its navigation or its checkout procedures or its payment technology, and you want to be able to access a variety of different merchants there. And it's really a kind of a way to, it's kind of like your virtual mall, so to speak. You go to the mall and all these groups kind of rent space there. So besides somebody like an eBay, there's companies like Etsy, where many people who make handmade goods and items can list their products on the Etsy platform and get paid. Well, at the same time, the users who are, or the consumers who are buying, kind of have that security of not having to go to hundreds of different types of websites or payment options, and instead just use the Etsy platform to access that. Another very common kind of marketplace provider is PayPal, that provides the payment technology across many different sites and really is kind of a payment marketplace, if you will. Another company is Grubhub, which really allows you to access all types of restaurants and other types of food merchants and order food directly from these sites using kind of the Grubhub platform. So those are just examples beyond kind of maybe the more common ones thought of that I think provide this kind of familiarity, this platform experience to online retailers and really allow the mom and pop shops, so to speak, to sell online without having to create their whole presence and payment platform and web basket architecture, even package delivery service from scratch. Instead, they just plug into that platform like Etsy and then trust that Etsy will kind of deliver the exposure and the standard consumer experience that most people shopping online have really grown to expect.
Yeah, and it's funny you mentioned Grubhub because I saw that company in the list of holdings and Netflix as well. And at first glance, I said to myself, oh, this is kind of weird, but now after talking to you, I feel like the story is more anything that's purchased online and not so much just what people might think of as traditional online retail, be it Amazon or something like that, but just really purchasing things online as well. Is that a good summation of what's going on for this IBUY ETF?
That's right. So a company that is receiving 70% or more of their revenue from online or virtual sales. So conceivably, if we see one of these car companies, car service providers, ride-sharing companies like an Uber or a Lyft IPO, they would be companies that would be included here, that they'd be retail purchasing of transportation online, and they'd be very likely candidates to be included in the index based off the criteria. So, yeah, it's typically broader than, we've talked about pet medications. There's companies that sell flowers, companies that sell food, platform providers, content providers like Netflix. It's fairly broad, but these are, by looking at where their revenue is coming from, we feel like we're getting kind of the companies that have the most sensitivity to kind of this move and this trend to buying things online. And that 70% number is a hard and fast number. So believe it or not, we've had some people ask us, well, if Walmart totally reinvented their business and 70% of their revenue came from their website, from online sales, could Walmart be in the online retail ETF? And we said, yeah, it could. It would qualify for index inclusion there. So we could see some names or brands that we wouldn't think of them necessarily being an online retailer, maybe because of their legacy, but they change their business model up and see such dynamic growth in their online retail sales that it becomes 70% or more of their revenue, and they would be then added into the ETF.
Yeah, I'm guessing that's probably still a long way off for Walmart to get to 70%. But just as sort of a last question, do you have any final predictions for the near-term future of online retail, or even this coming holiday season and what it might hold for some of these companies?
I think going into the end of 2017 could be very key for online retail companies in terms of growing their market share in a big way. I mentioned before that we're up to a little over 8,000 physical store locations around the U.S. closing this year. And that last 3 months of the year is a massive shopping season. And, well, many of us may not realize our local store that we go to once or twice a year closed. Come the end of the fourth quarter or end of the year when we're maybe doing holiday shopping, etc., and we go and find out that store is closed, that's going to take a lot of people, I think, online, and it's going to be a big shot in the arm for online retailers. Now, it seems like there's, at the same time, a battle line being drawn. You've probably seen the announcements with companies like Target and Macy's announcing some significant holiday hiring. In fact, even Target, I think, has just announced they're going to increase their minimum wage to $15. Some of these kind of legacy brick-and-mortar players are really throwing the gauntlet down here at the end of the year and beefing up their physical presence in a way that we haven't seen for a number of years. And it seems like it's kind of this last-ditch effort to really emphasize their differences or maybe their perceived advantages versus online retailers by having more people in the store that are employees that have expertise and can provide customer service. So I don't think this is going down without a fight. There's definitely some brands that are really increasing their seasonal hiring. But at the end of the day, I think it's just very hard for the brick-and-mortar companies to deal with increased labor costs, real estate obligations they have, a lot of the inefficient inventory and space considerations they're dealing with in their physical stores. It makes it just harder for them to compete with often the very tech-savvy online retailers who have better supply chain management, better delivery mechanisms, and a lot of robotics, in fact, helping them kind of automate much of what's going on behind the scenes. So I think we'll see a steady increase in online retail market share like we've seen over the last, going back to 1999, but potentially an outsized increase going into the end of the year here as there's just less physical store locations and online retailers continue just to have a more efficient business model. And I think that will end up showing up in their stock prices and kind of their outlook going forward for these individual companies and the industry as a whole.
Definitely. Well, we'll have to keep an eye on these trends this holiday season. But Christian, thanks for coming on to discuss the online retail market. Great to have you here.
Thanks, Eric. Appreciate being on the program and look forward to speaking with you again.
All right, everyone. That was Christian Magoon, CEO of Amplify ETFs. You can learn more about the ETF we discussed, IBUY, at amplifyetfs.com and more about the index the fund tracks at eqmindexes.com. Well, hope you enjoyed this edition of the Dutram Report. Make sure to tune in for more interviews and discussions on the world of exchange-traded funds in the future. And for my thoughts on the ETF world, make sure to go on over to Zacks.com and check out the ETF Investor Service, which includes my top picks and commentary on the markets. And don't forget to find and review the Dutram Report on iTunes. And if there are any topics you want us to discuss, feel free to reach out at podcast@Zacks.com, my Twitter page @EricDutram, or leave us a comment over on Facebook too. But be on the lookout for a new edition of the Dutram Report each and every Thursday. But until then, for Zacks.com, I'm Eric Dutram.